Morgan Stanley first quarter profit beats estimates on cost cuts. Morgan Stanley reported first quarter profit that beat Wall Street estimates as the firm cut costs and revenue from trading stocks and bonds declined less than some analysts predicted. The shares climbed. Net income fell 53% to $1.13 billion, or 55 cents a share, from $2.39 billion, or $1.18, a year earlier, the New York-based company said Monday in a statement. Profit surpassed the 47-cent average estimate of 22 analysts surveyed by Bloomberg, while Chief Executive Officer James Gorman has been shrinking the firm's fixed-income trading division to emphasize the less volatile wealth management business. Morgan Stanley is still exposed to slumping markets that hurt results across Wall Street. The firm follows JPMorgan Chase Co., Bank of America Corp., and Citigroup Inc. in lowering expenses to compensate for falling revenue. Goldman Sachs Group Inc., which reports results Tuesday, is embarking on its biggest cost-cutting push in years. People with knowledge of the effort said last week. Revenue fell 21% to $7.79 billion, compared with a $7.76 billion estimate of 18 analysts surveyed by Bloomberg. Non-interest expenses fell 14% to $6.05 billion, below the $6.42 billion estimate. Compensation expense dropped 19% to $3.68 billion and non-compensation costs declined 6.2% to $2.37 billion. The first quarter was characterized by challenging market conditions and muted client activity, Gorman said in the statement. While we see some signs of market recovery, global uncertainties continue to weigh on investor activity. Shares rise. Morgan Stanley shares, which fell 19% this year through Friday, advanced 3.1% to $26.55 at 7:36 a.m. In New York, the firm generated $873 million in first-quarter fixed-income revenue, 54% less than a year earlier and the weakest start to a year since Gorman took over in 2010. Equities trading revenue declined 9.3% to $2.06 billion from $2.27 billion, compared with the $1.93 billion estimate of Citigroup Inc. analyst Keith Horowitz and $1.95 billion estimate of Credit Suisse Group AG's Susan Roth-Katska. Advisory revenue climbed 25% to $591 million from a year earlier on higher completed merger business, according to this statement. Our equity franchise continues to do extremely well, Chief Financial Officer Jonathan Prusen said in an interview. In fixed income, we have more work to do, but it was a pretty decent quarter, he said. Wealth management revenue dropped 4% to $3.67 billion, compared with the $3.73 billion estimate of Wells Fargo & Co. analyst Matthew Bernal.